Let's talk about debit cards and credit cards, how each type of card is similar and how they are different. Both credit and debit cards are used to pay for things the same way you might pay with cash or a check. Both types of cards are accepted by most stores and services, making them easy to use. Both cards can be linked to mobile wallets or peer-to-peer payment apps like Cash App or Venmo. And both offer protection if you tell the company that your card was stolen, lost, or used without your permission. Plus, both cards look a lot alike. So, how are they different? The difference is in what happens when you swipe, tap, or insert the card to pay. Let's say you're buying a new shirt that costs $30. Looking good. That $30 will come from a slightly different place depending on which card you use. A debit card is a payment method linked directly to your checking account. So, when you pay using your debit card, the $30 transfers almost immediately out of your checking account and into the store's account. A credit card is also a payment method, but instead of the $30 coming immediately out of your checking account, you are using someone else's money. That someone else is a credit card company who you are promising to pay back. Let's dig a bit deeper into debit cards. We know that the money transfers out of your checking account and to the store's account almost immediately. This is the most similar method to using cash to pay for something, but it's easier to carry around than cash and simplifies keeping track of your spending with your bank. They list what you've spent and how much is left in your account at any time. You can also use your debit card to get cash out of an ATM or as cash back when you make a purchase with a debit card. Be aware, using an ATM from a different bank than your own may result in extra fees. Your debit card is also safer than using cash because it's protected by a personal identification number or PIN, which you should never share. If someone does fraudulently use your card to take money from your account, your bank may give you the money back as long as you catch it early by checking your online statement and report it to the bank immediately. A debit card is a good payment type to use when you're keeping close track of your spending because it's difficult to overspend. If you don't have enough money in your account when you attempt to buy something, then your card may be declined, and your bank may charge you a fee for spending money you don't have. So always check your account to make sure you have enough for all purchases. If you choose to use a credit card to buy the shirt, then you are actually not paying for the shirt right away. Instead, you are borrowing money from the credit card company. Remember, the credit card company sends the store the $30 and charges them a little extra for letting you use their credit card, then adds $30 to your credit card bill that you have to pay, usually once a month. When that bill arrives, if you can't pay the credit card company back for everything you've purchased, the credit card company will charge you extra money called interest for borrowing more than you could pay back on time. This interest piles up fast. It might seem like just a little amount at first, but if you borrow too much and continue to leave it unpaid month after month, the interest can end up meaning that $30 shirt winds up costing you $35 or even $100 instead. The biggest danger of credit cards is how easy it is to overspend and end up in debt, which means owing the credit card company more money than you can pay them back. Getting into debt hurts your financial reputation and can limit the lifestyle or maybe even needs you can afford to spend on. So why use a credit card? For one, using a credit card responsibly by paying back the credit card company in full, on time, every month helps build your reputation as a responsible borrower. This good reputation means other companies are more likely to let you borrow money later for things like a car loan or a mortgage on a house. It also means that the companies that give loans will charge you less interest, meaning you can make big purchases and pay them back over time with less extra money. Other benefits of using a credit card include rewards and fraud protection. Some card companies will offer you money back or rewards to take a vacation, depending on how much you spend. Credit card companies will sometimes help you get your money back if you bought something that broke right away without any explanation, like a computer or a washing machine. Or if someone uses your credit card to pay for something without your permission and you report that fraud, the credit card company won't charge you for that purchase and they'll do the work to track down the fraud. So while debit and credit cards look a lot alike and are convenient ways to pay with some similar protections, they have very different pros and cons. Whether you're looking to build your borrowing reputation, track your spending, or stay out of debt, choosing the right card can make all the difference.